What's up, everybody? Welcome back to Trading Wars. Thanks for joining me today. Today, I'm going to be doing a special stream focusing on options with SPY, trying to show you guys some great ways that you can maximize your options gains and just good trading overall in general. So if you're ready, let's step into the war zone. First and foremost, why don't you let me know where you're tuning in from tonight, and I'll throw your name up on the screen. And let me just retweet and let everybody know we're live now. Come learn how to maximize options gain. I think this is a good video going into Lotto Friday. I definitely do think it's a great video. So let's see. So who do we have in the building today? We have Spiffy. What's going on, buddy? Roop, how are you? Good to see you. Mike, what's going on? Edgar, Trading Wars Army in the building. Good to see you. Ernesto, what's going on, brother? Jenny, good to see you. Monique, what's going on? Mike, what's going on? Salstar, what's up? What's going on? Yes, all of my YouTube streams are loaded as replay, so you'll be able to watch it whenever you need to. All right. Okay. So let's do this right now, guys. So let me write a few points down first. Okay. So what is Fibonacci trading? Okay. So Fibonacci trading is reversal and trend continuation. It's not breakout trading, not breakout. Okay. And when you're trading options, you need to get a good deal, period. Okay. You need to get a good deal. And why is this in black? Those are the fundamentals right there, guys. So Fibonacci trading is always going to give you a reversal type of setup, and it's trend continuation. And lastly, it's going to help you get a good deal in the options. Okay. So let's go ahead and talk about some of the easiest Fibonacci's to trade. All right. So I'm here on the SPY chart today. Okay. And before I talk about the live commentary today, let's just look at some simple fibs. So the fibs will always be in three categories: morning leg, afternoon leg, closing leg. And this is all in my books. Okay, guys? Those are the three. That's intraday. And then if we go down here, this is prior day range. All right. So what I'm going to do right now is I'm going to focus on the easiest ones. So the easiest ones right here are going to be the prior day range and the afternoon legs. Okay, that's going to be the easiest one for you guys. So the afternoon leg, what it is, guys, is it's basically the pullback that happens during lunchtime. So write that down. Okay. The afternoon leg is the pullback that happens during lunchtime. Generally in lunchtime, we get a pullback. The reason is because the volume dies down, right? And with that volume dying down, we tend to chop, and that chop genuinely leads to a pullback. So the afternoon leg is getting that pullback. So how do you do that? Okay, so we went short this morning up here, and then once you get that morning push, so here's the morning push. Let me draw it. All right, so there's the morning push right there. So this takes us to about 11 o'clock. And then you see now this is the lunchtime area right here. So 12, 1 o'clock, you could see we start pulling back. So what you want to do there is you always want to draw the first push down. So this is the push down that happened in the morning. You want to go ahead and take a Fibonacci and you just want to stack it. Okay? Like this. And what I'm going to do here is I'm going to simplify this for you. I'm going to take off all of my custom Fibonacci's. And I'm just going to keep the 618 and the 50 for you guys. And these are my custom ones for the people that ask me. You can just copy these, okay? All right, that's all I'm going to keep here. The 50 and the 618. And what I'm going to do here is I'm going to go ahead and draw. Make sure that this lines up correctly. So 44379. And the low is 843980. Okay. All right. So as an options trader, you generally want to buy on a pullback. And the reason for that is because the option premium is going to be cheaper. So we had this push down in the morning. Now, when we come back up into the 50 and the 618, into these areas, this is where you're looking to buy your puts, because you're looking for a good deal. Okay. You don't want to buy puts here. So you don't want to buy puts when we're making new lows. You don't want to chase them. You don't want to chase options when we are making new lows or new highs, because the reason is the option premium is going to be extremely expensive. You don't want to buy puts at lows. You want to get it when it's coming back up. And this is how you do it. Okay. Generally, we're going to retrace anywhere between 50 to the 618 up to the 786. But for this video, I'm making it as simple as possible. This is what you're going to do. When we come to the 50, you're going to short. That's it. And you have a good risk to reward here with puts. So what you can do is two things. As soon as it touches the 50, you can buy the puts, or you can wait for a fractal pattern like an inside bar, like this one right here. You can wait for that, or like a holy grail. You can wait for the specific pattern that you want. Like these are fractal trades, and then take the trade from there. And the whole point of that, guys, is you're getting a good deal. Okay. Remember, stocks don't just go down vertically. They have to pull back. They have to get relief. It has to pop back up at some point, usually in the afternoon. And in that time during the afternoon, you're going to wait. You're going to let the option premiums chop up a bit, and you're going to take the next leg down. Boom. All right. Like this. And remember also, option premiums are going to be very expensive in the morning. Okay. Option premiums are going to be very expensive in the morning because there's gaps, all that, the premium. But if you wait for you at the page, that's why I do the midday scan. Like that's why I literally came up with the midday scan. You guys know I post a midday scan every day, because it gives a chance for the premiums to get hit. And then what you're literally trying to do is be the person to come and take this short here on the 50. Get the premiums for a good deal. Do not go ahead and buy at the lows. All right. And then that brings me to another point. So the majority of you are familiar with flags, right? Bear flag, this and that and all that. Okay. So here's your flag. Okay. Let me make this line extra thick so you can see it. So there's your bear flag. Okay. So we have a push down, we flag up. Here's your bear flag. So the bear flag, what it does is it gives you an entry probably right here when we break the flag. Okay. The problem with this is that by time it gets here, you could have already lost a potential 10% on the option contracts if you were to get in at the high. Okay. So now let me draw back the fib. You see right there, right? You could have just taken it on the 50 instead of waiting for the flag to break. And why does that matter? It matters because if you do this 100 times, you can make 100% more returns. You guys understand that? One strike out the money. Simple. Same week expiry. Lotto, 0 days to expiry if you're more aggressive. Hit me with a 1 if that makes sense. Most of you guys understand flags. Most of you guys understand channels. Most of you guys understand FediWap, JLo bottom, all that stuff. But what you need to do is you need to get in before it happens. You need to predict the price action before it goes there. You have to. If you want to make money in this game, you can't wait for it to move 10 or 15%. And you never know if you're going to be right or wrong. Who knows that? What do you think? You guys think this is 100% win rate strategy? Of course it's not. Nothing is. But listen to this. If we make on average double of our losers, all right, so when we're trading this here, because we're getting such a good entry, if we're making on average double our losers, how many trade out of 100 do we need to win? Tell me right now. Tell me right now, how many trades out of 100 do we need to win? And this is important because you have a better chance of a winning trade because you're getting in before the confirmation, before the flag, before et cetera, et cetera. You're getting in before that. So now all of a sudden, when you do win, you're going to win significantly more. I'm talking about 10%, 15%, 20% more gains over time, over 100 trades. That's going to make you a lot more money. So write that down. So yes, 34 out of 100. You need to write that down. You need to get a tattoo of that right now. 34 out of 100. That's what we're looking for. That's what I look for every single day. That's what I tell myself every single day. 34 out of 100. That is the game that we are doing. Okay. So I don't want you right now to worry about the morning leg or the opposing leg. I don't want you to look at those two. I want you to do the simple ones. The simple one is the afternoon leg. And let me go to my Twitter right now and show you easy ways to do this. I don't want you to look at those two. I want you to do the simple one. The simple one is the afternoon leg. One second. And let me go to my Twitter. I hear myself. I'm pretty intense. So this is what you're going to do now. You're hanging out on the Twitter every day with me. When I post the midday scan, that's what you're going to be focusing on. Where am I at? Where am I at? Oh, here. Okay. So where's the scan? Here. Okay. So when this scan comes through, now this is what you want to be looking at. Okay, guys? You want to be looking at this. Let's go to Apple. Let's talk about Apple today. Okay. So the same thing. So I post the scan around 11. So now you're saying, okay, what's happening here around 11? Well, we have a clear high up here and we have a low right here. So if I take the fib from the high to the low right there, there it is again, guys. There's your 618 right there. Boom. There's your 618. Look at that. Beautiful flush. See that? So use the midday scans that I post and go ahead and then pull them up in your chart and look for those plays. And if you want, you can come trade them with me. You don't have to. I'm not asking anybody to do anything. I'm just showing you guys. Okay, you could definitely just do it all by yourself. But if you want to see what I'm doing, you can come into the room here with me and I'll tell you the ones that I'm taking with the exact entry and stops. Okay. So there's another example. And let me just show you guys. Like, I'm not playing around with these stuff. Like, this is serious for me, guys. Look, that's my profit on Apple today, $600. I'm one of the very few people that are showing you, you know, the money they're making because I'm trying to be real about this. Like, I'm not trying to play games. It's serious to me. It's very serious to me. People's financial freedom, trying to achieve something in life. When you come from a background like me where you have nothing and you get somewhere and you want to help people, it means something. So I'm not here to play games like a lot of people. I'm not. Okay. So that was Apple, and then I also had one on SPY today as well. Okay. So that's the midday. That's the midday play. I like the midday play. The pros of it is that you let the market do its thing. You let the option premiums just get knocked up a little bit. Then you come in and you take the fib play. Okay. And the fib play is going to give you good risk to reward because you're not waiting for a breakout. You're not. Okay. So here's an example here. Let's go back to Apple. Let's do a quick poll. So here's your high to low. If you short here, or if you wait for some flag like this and you short here, which one do you think is going to get you cheaper puts? Hit me with a 1 if you think shorting on the 618 is going to give you cheaper puts. Hit me with a 2 if you think this breakdown confirmation flag is going to give you cheaper puts. What do you guys think? 1 or 2? And then what we're going to do is I'm going to show you the previous day's range. Okay? I'm going to show you the previous day's range right now. Okay. Good. Yeah. So you guys know, right? I mean, we don't listen. The whole point of this is don't show up late to the party. Do not do that. Boom. Jonathan, what's going on, brother? Welcome to the Trading Wars Army. Trading Wars Army members, can we please welcome Jonathan with the Trading Wars Army? Welcome, brother. Appreciate you. All right, guys. So let's move on to the previous day's range now. And what I'm going to do here is I'm going to go back to SPY. And we're going to go through this together. So let's go to the beginning of the week. Let's go to the beginning of the week, guys, and let's discuss this. So where are we? What day was the beginning of the week? 14. All right. When you trade too much, you start to forget the dates. Okay, 9:30. I'm gonna hit the replay, and I'm gonna show you this one now. Okay. So the previous day's range, guys, is very simple, because what we're doing is we're just looking for the range of the previous day and the high and the low of the previous day specifically. So what makes that so powerful, guys, is that it's set in stone, right? There's nothing dynamic about it. It is what it is. The previous day's low, high and low is never going to change. Okay? It's never going to change. So what you want to do here is you want to go ahead and you want to take the Fibonacci, and you want to take it from the high to the low, or the low to the high, it doesn't matter. Okay, either one is fine. And I'm going to have to add back my fibs here, and you can follow along with me. So I go here, 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 here. Like, I have a lot of them because I do a lot of testing. You don't need all of these for sure, but I have them just for myself. Okay. So now what you're doing is this. So am I missing anything? Yes, I am. Okay, one sec. So this one, I need a 10% here. And then I think we are good. I don't need that one. So this is my fib settings for anyone that's interested. Okay, so what we're gonna do here is this. We have the high right here and the low. All right, so what I'm gonna do here is I'm gonna draw a box. So this box represents the range of the previous day. And let me just zoom down a little bit. And what you're going to want to do here, guys, is from the 10%. So the 10% is not a Fibonacci. It's one of my custom tools that I created, like a custom level I created based on my backtesting. So the 10% down to the 272 is the typical reversal area. Okay. And let's try to make this a different color. So right there, okay. So here we go. So what you want to do with the previous day's range now is you're looking, right, for when it breaks the low or the high, if we can get cheap reversals. Okay, we can get cheap reversals. So let's play this out. So here's an example. This was Monday, right? So we're in the range of the box, then we break down. So now when we come lower, watch how we react here. So the 10%, we have a nice pop. Okay, we keep going, come down again, hold at 10%, right? Beautiful, double bottom, etc. So what this is trying to do, guys, is when we break down, instead of taking the breakout, like instead of going short, we're looking actually for the reverse. And the reason why we're looking for the reverse is because the reverse is going to give you cheap options the other way, right? Because look, if we're starting to break down and break the previous day's low, calls are going to be at a good price because we're going lower. So the calls are going to be relatively cheaper. So that gives you a good risk to reward opportunity. So we're using the range of the previous day, and we're looking at, okay, when we do break it by 10% or any one of these levels, what do we see? Do we get patterns? Do we get confirmations, right? And what we get in here, guys, is we get a 10% extension with a double bottom pattern. All right. So that's one. Okay. And then you'll see, now check this out. So later on in the day, we come back down now to the 272. We put in this little doji, right? We hold it, outside bar, bam. So the whole point of these, right? The whole point of these is it's to show you where on the other side of the range can I get cheap premiums. So let me ask you a question. If you buy calls on the 10% here or on the 272, especially this one here after this massive sell-off, do you think they'll be cheap? Hit me with a 1 if you think they'll be cheap. And what this allows you to do is it allows you to set up for cheap option plays that have good risk to reward. Because look, if it doesn't work, it's fine. Okay, you take a stop out. But if it does work, what's your upside? Your upside is huge, especially if you play zero days to expire. All right. And I've gone through this in a lot of my videos. So please check them out, guys. Every single day we do recaps. So make sure you do that. Okay. And what I want to do right now is let me just get back to today and let me just show you the live callouts that I did. And then we're going to wrap it up. Okay. So previous day's range, very important. Let's go back to where we were today. All right. So the video is guided to help new traders to just focus on a little bit more of strategies that will help them get cheaper option premiums with higher risk to reward. That's what I really want to do, the message there. I just want to show you guys the power of the Fibonacci so that you can incorporate it in your trades. You don't have to, just do Fibonacci every single trade or whatever, but you can use it to help you with your trades and to get cheaper plays. Because at the end of the day, guys, if we have a 2-to-1 risk to reward, we need to win 34 out of 100 trades. Okay. Trust me, my win rate on a good week will be about 60%. 60 to 70%. Like that's the peak. No trader is going to be higher than that unless they're trading with a bad risk to reward. And if you're trading with a bad risk to reward, that means you're not actually making money. You're just doing it for publicity. Okay. But as long as you're above 34%, you're going to make money. And that's the thing. It's not about being right, guys. I want you to remember that. It's not about being right. It's about when you're right, you better make money. So here we go. So this was my call outs today in the morning. So the first thing we had, guys, is the trigger plan that I posted yesterday. So let's walk through this. So the trigger trades are automated trades that I use. So let's look at this one first. Okay. So yesterday we posted, okay, we want to short at 442.55. So let's replay today and let's talk about the trigger. What I like about the trigger trades is that they're automatic. So I have a mixture of strategies that I use. The Fibonacci is it's the bread and butter. It's the first book that I wrote, but there's a lot of great strategies out there. And for me, when you get to a point like me, you want to mix up your strategies. You want to have a lot of different strategies going, because just think about it like this. Every strategy has a chance to win. So you want to diversify. Boom. What's up, brother? What I do with the $2. Thank you very much, brother. Appreciate that. All right. So this yellow line here is my short. So I posted this yesterday. You could see yesterday at 16:58. So my plan here was short 442.55 and my stop 444.28. So let's do this together. Stop 444.28. Okay. So I'll put the stop loss in red. Right. And then the target is 440.91. $440.91. And let me go ahead here and make this green. All right. So what this is, guys, this is an automated trigger plan. What I do with this is I put the order into the broker the night before. So there's two ways you can put the order in. You can put it in with shares or options or futures. There's actually three. And what I'm doing here is when we break 442.55, I want to short. Okay. And if we come back up here, then I want to get stopped out to the red line. That's my protection. And then if we come to the green line, I'm fine with hitting my targets. Okay. So that's basically, so let's walk this through now. So how does this play out? First 5-minute bar, we don't break the trigger. We're just chilling. hanging out. Boom, there's our trigger entry. Our stop loss is up there. Bam. So literally, guys, within 5, 10, 15, 20, 25 minutes, in and out of the trade. So that's a trigger. Hit me with the 5. Does anybody play triggers in here? Hit me with the 5 if you play the triggers, or if you like the trigger. So the trigger is probably like the most simplistic. You can't get any simpler than that. Obviously, there's pros and cons. The pros, it's fully automated. You don't really have to do much. The cons is you don't get to micromanage it, right? And if you want to tighten up the stop loss or whatever, you can't do it unless you're live at the computer. So this type of trading is how you can easily go ahead and just automate your orders, especially for those that are really, really, really busy. Okay. So that was a trigger. So that was a winner today. And yesterday we had 2 trigger winners. So yesterday we had a trigger here and then a trigger long. So they both won. So the triggers have been on a massive rampage right now. So very happy with those. I use interactive brokers. Okay. And then I'll just talk to you through the morning plays. So the first play that I took today, guys, was a 3-minute opening range breakout. And I'm going to walk you guys through there. So every morning I give commentary. And I walk people through live through my trades. So where are we in the morning? Okay. So we start off this morning. Lots of traps have been laid overnight. We need to be reactive to the price action this morning. So be ready to follow along. Let's do this 2-day winning streak. Let's make it 3. And the reason that I said that off the bat is because obviously we had a massive gap down, right? So that right away was the reason that I wanted to take the opening range breakout. So you'll see here, I got in short at 933 and then crazy volatile so far, take some partials. So with the 3-minute opening range breakout, guys, this push down got me to a partial target and that was it, right? And after that, guys, we flipped around for a bit. And what I did is once we started flipping, like doing this back and forth like this, I went to the 5-minute because the higher time frames can give you a clearer picture, okay? So I went back to the 5-minute and then this inside bar came up. So I tried this inside bar as well long and then it came back down. So I knew that, okay, I'm going to take a tight stop out here, but then we got this pattern. And this is one of my rare patterns. It's called the Trading Wars Nirvana pattern. It's an inside-outside bar with a blue highlight. And that is one of my strongest patterns because it represents a lot of trap traders. And this is the one that we took that was the huge winner today. So this is exactly what I was trying to say to you guys is you don't have to be perfect. I wasn't perfect, but I was still able to make money. I made money on the trigger short and I made money on the 5-minute Nirvana. So if I had 2 winners and 2 losers, I'm still walking away with money, right? That's what I'm trying to tell you guys. You don't have to be right on every single trade. And you'll see right here. So trying the 5-minute IB long, right? And then I said I got stopped out. Lots of whipsaw. And then I said right here, the SPY 5-minute Nirvana. And I said, okay, guys, I'm going to take the 5-minute Nirvana and call it here. So I love this setup. Let's see. So short on the Nirvana stop is at the high of the day to be safe. And then here were the short targets. And then we hit them all the way down, guys. It was a beautiful rollover. You can see here, cover. All right, just a runner left. How to trade Nirvana for a living part 100. We have a joke in our room because literally it seems like those patterns really, really pay a lot. And then you could see over here, guys, that was the call out right there on the Nirvana. And then we had the rollover. And what I like to do is personally take a few plays in the morning and then look at the midday scans for some plays for the afternoon and call it. I don't like to take anything into the close, like anything after 1 o'clock or 2 o'clock, but you can definitely take them if you get the pattern. I like to cut my trading off just so I could stay very routine based. So I only use TradingView for the charts. I use my broker interactive brokers and trader workstation to enter my trades. All right. So there we go, guys. Hit me with the 8 if you guys follow me there. Did you guys follow me on that one? So there's so many setups. There's so many opportunities today. You just look, I had 4 trades, 2 winners, 2 losers, and I made money. And that's what's going to happen sometimes, right? You keep trying good setups until you catch that winner. And that winner, if you catch it and you manage it right, could be a huge, huge W. And that's what happened with this one. This was a huge W. All right. And there we go, guys. So that was my recap for today with SPY. I also did Apple. I showed you Apple. And what I want you guys to do now is just take some time to determine how you want to trade, right? Do you want to be a afternoon Fibonacci player? Do you want to be an opening range breakout player? Do you want to be a trigger trader? Do you want to take the previous day's range extensions? Whichever ones you guys want to do, it's totally fine because they all have the ability to make money. But what's going to make the difference between your success and your failure is if you're going to be consistent. Can you do 100 trades of this? That's my mission to you. It will transform your life if you could do 100 trades. And I'm not saying to risk any money. Okay. Don't risk any money. Just do paper trade or do a back test. Okay. And do 100 and experience it and see what the results are and prove to yourself if you can make money or not. That's my goal for you guys. That's what I'm trying to do here. Okay. So I want to motivate you to take that leap because you don't know what you're capable of until you try. Don't risk any money. Do not risk any money until you feel comfortable. All right. So there we go, guys. Hit me with a 9 if you enjoyed the session. I really want to take a second to thank everybody for coming out here. I know sometimes a little bit vocal, but it's because it's very passionate to me. I've lost a lot of money trading. Back in the day, I've lost a lot. And it hurt me because the people that I looked up to and the people that I thought were helping me were really just not. And until you actually take the trades, like I said, 100 trades or whatever the number is, and you practice, you're not going to understand. You really need to be in the game. It's like trying to become a basketball player without shooting free throws or without taking shots. You're never going to understand. You got to be in there and you got to do it. And I just want to encourage you guys to go forward to your goals, man. Just keep going. Okay. Keep going. Just do your best. I have almost 400 videos on YouTube. Watch the 400 videos. Okay. Just watch one a day. Okay. It's going to change your life. Trust me. I promise you it will. Okay. All right, guys. So thank you very much again for your time. I really appreciate you. Please comment right now at the end of this video. Anybody that comments has a chance to win a giveaway. We do a giveaway every Sunday. Okay. So I'm going to end the broadcast here. And what I want you to commit and tell me in the comments if you want to, which one are you going to do for the 100 trades? Let's get some volunteers. Are you going to do afternoon leg Fibonacci, morning leg Fibonacci, reversal Fibonacci, prior day range? You're going to do triggers. You're going to do orb. Volunteer for one, guys, and put yourself out there and let's see what you get. After the 100 results, you can share it with me. We can interview you. You know what I mean, guys? We could. This is what the community is supposed to do. All right. All right, guys. Thank you for your time. And tomorrow, Lotto Friday, going hard tomorrow. Hopefully we can kill it. And guys, the Fibonacci that I was talking about was my first book, Fibonacci and Options Mastery. So if you really like the fibs and if you got some value from it, if you've made some money doing it and you feel like, I deserve it, grab a copy of the book. Okay. That's my ask. You get 1 month for free in the room, but not until you feel like you gain value from me. If you don't gain value from me, it's fine. You don't need to buy the book. All right. But if you do, I would really greatly appreciate it. All right. Thank you so much for your time, guys. Don't forget to comment. I'll see you tomorrow and let's try to crush this. All right. Thank you. Take care.